You know, there's a reason why money launderers don't need ski masks or back alley deals anymore. These days, the safest places to hide dirty money is right in front of everyone's face. Law firms build the tools, banks move the capital, and cities write the rules that make it all scalable. Dirty money is illegally earned and legally protected. But to make that conversion, you need a few key features, okay? And in this video, we're breaking down those features, looking at how the dirty money capitals have changed over time and where the ultra-rich hide their money today. Let's talk about the dirty money capitals of the world. This is Finance Mindset, the home of financial stories, big lessons, and even bigger ambitions. Starting off our journey today, let's look at the different levels of dirty money. Because we gotta get something straight here. Not all dirty money is equal. We put them into 4 different levels or scales. There's number 4, white-collar dirty money. This is fraud, bribery, insider trading, market manipulation, embezzlement, and tax evasion. Usually it's committed by corporate insiders, politicians, or professionals. Think companies like Apple, Alphabet, and Microsoft rerouting intellectual property income through Ireland or the Netherlands to reduce global taxes, which we'll talk about a little bit more later. Then there's number 3, the commercial dirty money. That's where businesses look normal, but the profits are criminal. Think overbilling, fake invoicing, labor trafficking, illegal resource extraction and corruption, and getting government contracts. They use fake companies or shell firms, and it's linked to both the state and the private sector. It operates in regular industries like construction, logistics, mining, or fishing, but skims massive illicit gains off the top. Then there's state-level corruption. That's number 2. It's still legal, but it's shielded by power and harder to prosecute. So this includes kleptocracy, state capture, nationalized theft, and sanctioned corruption. And you know, the people who commit these acts are often heads of state, military leaders, and political elites who end up stealing their country's wealth and hiding it overseas. For example, Malaysia did it with their One Malaysia development, Berhad, which was supposed to boost national development. But instead, over $4.5 billion was allegedly stolen by insiders like financier Joe Low and former Prime Minister Najib Razak. Russian oligarchs with ties to Putin have moved billions out of Russia and into places like London or Switzerland. And, yeah, Nigeria, which is one of Africa's largest oil producers, has lost billions to bribes and stolen money that, well, has been hidden somewhere. And at the top, there's organized crime. This is really the highest risk. It's the cash earned directly from illegal activity like drug sales, bribery, extortion, human trafficking, or smuggling. Usually it's physical cash or direct wire transfers tied to criminal names or flagged accounts. There's a global network and it's cash-heavy and high volume. So think Mexican cartels laundering narco cash or Chinese triads running wildlife smuggling. Every level from Apple's white collar to the cartel's organized crime needs to go through a quote-unquote cleaning process, and each one has different dirty money capital. Different dirty money goes to hide, so you ask most people where the world's hidden wealth ends up and the answers would sound pretty familiar, right? Places like the Cayman Islands, Panama, Switzerland. But according to the 2025 Financial Secrecy Index, the most secretive financial jurisdiction in the world today is actually the United States. Singapore and Hong Kong are there too. And these are legal and financial capitals of the global economy. These places are meant to be modern, stable, law-abiding economies, not shady offshore islands. The law-abiding countries sit at the top because they cater to 3 of the 4 different levels: white-collar, commercial, and state-level dirty money. Economist Gabriel Zuckman says that about $7.5 trillion in personal financial wealth is held offshore. That's $7.5 trillion, which equals about 8% of global household financial wealth. In the United States alone, the IRS estimates that offshore evasion costs $100 billion a year in lost revenue. The top 1% is responsible for nearly 80% of that shortfall. And you know what? The Organization for Economic Cooperation and Development, or OECD, they track it closer to $11.3 trillion spread across trusts, shell companies, and secret accounts in over 80 million arrangements worldwide. At the white-collar level, you're dealing with multinational corporations and high-net-worth individuals who rely on legal but, definitely sketchy tax minimization strategies. Up until 2016, most of the world still believed that the final hiding places for dirty money were these tropical paradises, and then the Panama Papers were leaked. So those papers showed us that Panama was only the entry point, and really the real action, the ultimate parking of wealth, was actually happening in major financial centers. 11.5 million files came from a single law firm, Moscone, and they created and managed shell companies that parked most of their clients' money in London, New York, Zurich, and the Seychelles. Not only is the money being parked there, but it also moves from there. Multinational companies like Apple, Alphabet, Amazon, and Microsoft, well, they move their profits on paper to countries where they pay little to no tax. The profits aren't physically moved. Instead, the company will sell their products in one country and then legally record the income in another country where the taxes are lower. Like before its restructuring in 2020, Facebook declared most of its international advertising revenue through its Irish office, because Ireland's corporate tax rate is only 12.5%, the lowest in the developed world. So the Netherlands, the United States, and the United Kingdom now handle the majority of profit-shifting flows worldwide. People expect secrecy from tax havens like Panama or the Cayman Islands, but not from places with stock exchanges and big-name banks. But that's what makes them so powerful. The law is on their side. Within a week, a lawyer in London can register a British Virgin Islands shell company, link it to a Delaware LLC, and start transferring money without ever stepping into a bank or a courtroom. That's 3 different countries working together to fly under the radar. It's almost perfect. But before we dive into the next section, here's something for you. At Finance Mindset, we break down the psychology and strategies behind money and wealth. Want to level up? Hit that subscribe button, like this video, and join the conversation in the comments. And don't forget, you can also follow us on Facebook, Instagram, and TikTok for more financial stories, insights, and lessons you can actually use. More wisdom is waiting right here on the channel, so let's jump back in. Back to business. So Delaware is actually a part of why the United States is the biggest enabler of financial secrecy in the world. It's an LLC haven. It hosts more than 2.2 million registered entities, that is more companies than people, and the state profits directly. Franchise fees from those registrations fund 1/3 of Delaware's entire state budget. There's also Wyoming, which has surpassed Delaware's LLC per capita, and Nevada, which offers the same anonymity at a lower fee. But to clean your money, so you need, first of all, a super fast and cheap way to create a company without anybody overseeing it. Second, no public owner registry so that who really owns the company is hidden from everyone, including the government. Third, a strong legal system that will fight foreign subpoenas. Fourth, access to luxury assets so you can buy high-value stuff like condos, paintings, or boats that turn shady money into wealth that looks legit. And fifth of all, banks and lawyers who specialize in complex structures. And all 3 of these locations hit those checkboxes on the dirty money capital requirement list. They offer anonymity, low taxes fast, cheap setups, minimal reporting, and asset protection. Delaware and Wyoming are classified in industry research as conduit or secrecy capitals because their legal codes allow limited disclosure of ultimate beneficial ownership. The commercial level also needs an anonymous legitimate system, and London and Dubai offer the best deal for this. In London, shell companies with anonymous owners, usually registered in the British Virgin Islands, can buy real estate, government contracts, or invest in local businesses and turn that dirty money into clean assets, and honestly, nobody has to know who bought it. In fact, more than half of the homes in London's wealthiest areas are completely empty. London runs on secrecy, and you can see it clearly when you follow the money for even just a few steps. Since 2016, more than £11 billion in questionable funds have flowed into UK real estate, and over half came through companies registered in British overseas territories. The British Virgin Islands alone accounted for 90% of that channel. In 2022, the UK introduced a register of overseas entities. It was supposed to reveal who actually owns the properties. But a review by the London School of Economics found the opposite. Over 70% of properties held through offshore structures still list no public beneficial owner. In more than 1/3 of those cases, even law enforcement cannot see who controls them. Knightsbridge and Mayfair offer a clear example for us. 2/3 of the freeholds held by overseas companies are still anonymous. That's a great deal for someone who wants to turn dirty money into clean assets. Dubai has even better benefits. It has free zones where businesses can be set up quickly with minimal scrutiny, and luxury assets like real estate and gold are easy to move and hard to trace. Since 2020, the UAE's Golden Visa program has attracted over 80,000 high-net-worth individuals. A 2024 report by the Terrorism, Transnational Crime and Corruption Center called Dubai the largest global hub for black market gold. And, one of the top global destinations for laundering illicit finance. Gold can enter without scrutiny and leave with new paperwork that creates instant liquidity. In the first quarter of 2024 alone, Dubai had 105 property sales above $10 million, which is actually more than New York and Palm Beach combined. Prime villa prices are up 147% over 5 years. Developers, lawyers, and local banks all take a percentage. When the Financial Action Task Force removed the UAE from its gray list in 2025, the European Union disagreed. They kept the UAE flagged as high risk due to transparency gaps. Yet, the inflows didn't slow down. Capital keeps arriving. Projects keep rising. Now, once you move on to the state level, where the wealth comes from public budgets or national resources, the capital cities need to be even more prestigious so they can, seem more legit. London comes up yet again. This time with New York and Zurich at its side. Investigators and journalists who looked into Malaysia's 1MDB scandal found that hundreds of millions of dollars was used to buy luxury apartments in New York art and Switzerland, and even fund Hollywood movies like The Wolf of Wall Street. The U.S. Department of Justice confirmed that tens of millions in embezzled funds went into film productions. And just as a side note, a key person in this scandal, Joe Low, used those funds to buy a $1.3 million diamond necklace for model Miranda Career, $8 million worth of jewelry for Kim Kardashian, according to U.S. civil forfeited filings, and a $3.2 million Picasso painting as a gift for Leonardo DiCaprio. In the case of Russian oligarchs, well, they seem to love a London real estate moment. They buy homes in Mayfair and Kensington but never under their own names. It's the same story with Nigerian oil revenues. British banks like HSBC, Standard Chartered and NatWest were all involved in processing massive amounts of money from the 1MDB and Nigerian oil scandal, and they didn't do any due diligence on it. Then there is organized crime, right? Organized crime loves a place with low scrutiny, vast transactions, and access to liquid markets. This is where Panama, the Cayman Islands, the British Virgin Islands, and Dubai come in at the top. Criminal networks need to move cash quickly into systems that look clean. They use trade misinvoicing shell firms or gold smuggling to do that, and these areas specialize in handling those transactions with minimal questions. For them, their top priority is speed and concealment, not long-term asset protection. Each level uses a different capital because each has different vulnerabilities. The more public or institutional your crime, the more sophisticated and prestigious the cover needs to be. But now let's take a look at how hiding the money isn't a need, it's actually a strategy. If no one knows exactly how rich somebody is, where their assets are, or what country protects them, then every move against them feels risky. It's like trying to play chess when half the board is hidden. You might think the main reason why people hide dirty money is because they'll get in trouble if everyone knows where it comes from. But truthfully, okay, those in power do know, and they're in on the cover-up. Nobody's hiding the money from entrepreneurs or politicians. They're hiding it from you, me, journalists, ordinary people. They're hiding it from the public. That confusion is strategic because it keeps the rich one step ahead, and it helps them gain more power and pay lower prices. Just imagine a private equity firm bidding for a failing company. If competitors see $500 million cash on the bidder's balance sheet, the auction price rises immediately. But if that same cash sits inside a Liechtenstein foundation that nobody can link to the bidder, the firm can win that bid at a lower price, which makes secrecy a great bargaining chip. When a city becomes a laundering hub, the cash it attracts doesn't just slosh around in private accounts. No, it goes into public funds which can then be transferred and used again. The game pays the rich for keeping things secret, so being open can just simply hurt you. For regular people, this has ripple effects. Okay, housing prices climb out of reach. Public budgets get starved. Competitors who play fair cannot match the speed or scale of capital that never stops to declare itself. And these governments depend on the income secrecy provided. So, who's actually willing to shut it all down? Well, we could speculate in the comments because that's it for today's story. Want more? Head over to the channel and dive into our other videos. Until then, stay sharp, stay focused, and keep building your finance mindset. I'll see you in the next one, my friend.